Today is day 2 of the B20 summit that is being held in New Delhi, and I have with me John Denton, Secretary General of International Chamber of Commerce, the most representative and the largest business organization. Thank you, John, for joining us.
Sasha, great to be with you. And I think a big shout out to all your viewers and everyone in India who's made the G20 year of India so successful so far.
So India's G20 presidency comes at a time when the world is going through a lot of crises and chaos. What are the 2-3 mega trends according to you when it comes to global trade, and how is this affecting the ICC members?
Oh, wow, what a great question. Well, I actually was appointed by the UN Secretary General Guterres to sit on what's called the UN Global Crisis Response Group. And we are looking at 3 critical crises there. One, which I think you'd be aware of, is around food. The other is around access to finance and the way the financial system is not playing. And the other is around the energy transition. So they're 3 critical ones. I think an important one to focus on, given that I'm in India now, and I think the important role that India can play is actually on the food crisis. And what we're seeing, of course, is with the illegal invasion of Ukraine by Russia, we've seen a complete disturbance to the way in which food supply operates on a global basis. We are actually integral in creating what was called the Black Sea Agreement, which is an idea that I took to Secretary General Guterres. And my view was always that the UN was the best hall in which or room in which to have that completed. And it was very successful. You saw when it was operating that the exacerbation in food pricing, the challenges that were being felt in West Africa, Sub-Saharan Africa, and Egypt were diminished quite significantly. And now with Russia's withdrawal from the Black Sea Agreement, we're actually seeing a similar commencement of rise in grain prices. Now, it's not as exacerbated as it was, though it is complicated. As you know, India has put a ban on a couple of types of rice going out. And of course, what they've done, which is eased it slightly, is made some exceptions for developing and emerging economies. So I just want to say this is actually an issue because access to food and the failure to get access to food leads immediately to social unrest and political instability. We know as the largest business organization in the world, and let's not forget we're in 170 countries, almost 70% of which are in the global south, that civil unrest, social disorder, political disquiet can actually completely undermine the business environment. So it's in the interests of governments to ensure that people are adequately fed. It's in the interests of business to ensure that people are adequately fed. And it's in the interests, I think, of the G20 to make certain that the issue of food security and access to food is something that's discussed. And I hope the communique will actually reaffirm, because this will send a very strong message to the markets. So that's, as I said, there are 3 crises I'm working on, but I just thought, bearing in mind the particular focus at the moment on food, I'd like to focus on that.
Right. You have a pulse of what the global companies are doing, right? So in terms of what they are saying when it comes to investing in India, setting up manufacturing bases in India, what is the take? I would like to know from you.
Wow, what a great set of questions there. You snuck a couple in at the same time, Ocean. So listen, just on the India side, I think it's important to acknowledge that the Indian people and the Indian business has actually, I think, effectively supported an opening up by the political class of the Indian economy. So India has definitely, over the last 10 years, become a much more attractive place. And you can see the results on the ground for investment, etc. I mean, I first visited India some 30 years ago when we actually had the dual system operating, where the import prohibitions last were in place, etc. That is all gone. So that's a really promising thing. But I think bearing in mind the political appetite and the civil appetite and the business appetite for continued economic reform, I think it's really important that the Indian government does not now sit on its laurels. And I know that that's the last thing. We're going to an election campaign as well that will happen. But what's important here is to actually press the right levers. There is no doubt as well that SMEs are the critical driving force of the Indian economy. So we've got to be focused all the time on what can make it easier for SMEs to operate. So we know their big issue is around access to finance, and we know that economic development will be enhanced if more SMEs trade across borders. Trade is increasingly digital, so we need to ensure that, first of all, access to finance, that there's more work done on that. And the ICC has some initiatives that we're looking at to work with various Indian players to support that. The other is ensuring the ability to people to actually use digital modes of trade across borders. So digitization will be critical as well. So there are important levers to actually focus on in order to ensure economic recovery, but also further economic development of this country. On global trade itself, you're absolutely right. There is an increase in fragmentation. What we've been arguing against is this idea of decoupling, and I think you would have heard that language used. If you look at decoupling and then you look at what the IMF has actually predicted as an outcome of complete decoupling, it's a negative 7% on global GDP. Now that is a very significant number. And of course, 7 doesn't sound that big, but you know what will happen to economic opportunity in countries, and it will be devastating, not just in the north, but also in the global south as well. We've been urging a movement away from this idea of decoupling, and we're pleased to see that a lot of the rhetoric has now come away from that. But the rhetoric now has to shift not just to compete a strategic competition, which is where it is now, but actually when you talk about competition, where must you cooperate? If you think about it, global trade is actually underpinned by supply chains. They operate globally. We need to have more cooperation on a global basis to ensure that those supply chains continue to operate. The best way to actually ensure that happens is to have a strong and functioning multilateral trading system. So I think ensuring that the multilateral trading system continues to have legitimacy, continues to operate, but also is refreshed to actually reflect very much the new reality about how trade is done. And so that's something important. We're very heavily involved with this. We're involved at the WTO level. In fact, I've just created, with the Director General of the WTO Business Advisory Group, these are sort of things that need to happen because business needs to be brought much more into the, into the engine room of multilateral trade as well. Rather than an observer, we're actually an end user. We need to be part of the shaping of that system and its reshaping to make it function in this more complex world in which we operate.
Okay, you mentioned about lack of access to financing, right? So could you tell us what kind of investments, like is there an estimate that you do several studies, so is there an estimate in place, like what kind of investments should come in to bring back the trade volumes back to the pre-COVID levels?
Well, let's look at a couple of big numbers. I mean, the reality is that there's a deficiency or a lack of about $1.7 trillion, which is missing in order to enable trade finance. So we need to actually work to fill that gap. So there's lots of things that can be done here. We can look at how trade finance is weighted from capital adequacy point of view through the Bank of International Settlement, through the Basel process. There's lots of things we can do. We can actually look at how the whole trade finance system operates. So these are all areas, and most of them are policy areas, and also making certain that we align that, but also need to recognize this. It's not enough to say we're going to provide $1 billion, which is fine, which is something that World Bank or the IFC might say. When the gap is 1.7 trillion, we need to look again at how that whole system is operating.
But that is a long journey, right? It will not happen in a matter of like 3-4
years. I mean, to be frank, this is the discussion we've had with the Indian G20 Sherpa at the beginning of the Indian year, and I think there's an increasing recognition that this work needs to happen at a G20 level. And I'm actually pleased because, as we were saying before, SMEs are such an important part of the Indian economy. And if the key element which is needed to enable them to be successful, and that element also will help them trade across borders, which will lead to increased economic development, this is a matter of some considerable importance in this country.
All right. So lastly, the most important issue, that is the climate crisis. Everybody is talking about it. So I would like to know what are the recommendations from ICC with regards to climate crisis during the G20?
Wow. Well, we'll be actively, at the moment, one of our key roles is to crowd the voice of the private sector into the whole COP process. And one thing that's become increasingly clear is the private sector is actually way ahead of governments in terms of its action. The big issue at the moment is actually not the rhetoric around climate change. It's how do you shift the global financial architecture to allow more private sector investment to support the transition. Governments and multilateral development banks alone do not have the capacity to finance this transition. Philanthropy can't do it. We need to ensure that the incentives are there to shift the whole of the finance system. We are doing our bit. The ICC, we curate through the various instruments that we manage and actually are responsible for something like $10 trillion worth of trade finance. We're actually working to align that with sustainable frameworks around climate. So we're the first group to actually do the hard yards to actually bring the whole of that trade finance market, which is around 10 trillion, in line with the climate, with Paris effectively. So I'll be taking more considerations on that to Dubai at the COP28 process this year. So they're the sorts of things that need to happen, but ensuring that the private sector is involved as part of the solution rather than being yelled at is actually going to be key here as well.
All right, John, thank you so much. Wishing you all the best. It was a pleasure talking to you.
Thank you so much for your time.